Welcome to the Ticker USA, your premier source for gold, Bitcoin, and global market intelligence. Today, we're diving straight into some breaking market data that could literally redefine the entire crypto landscape as we know it. So let's get right to it.
Okay, here's a critical question for you. What if Bitcoin's biggest move actually isn't happening in public at all? While retail investors are out there obsessing over every little daily price swing, the truly sharp market participants, they're tracking something entirely. We're talking about quiet, strategic accumulation. The real story here is happening completely beneath the surface.
Section 1. Decoding Bitcoin accumulation.
So during an accumulation phase, major institutional players are basically acting like a sponge, strategically absorbing the available supply. And their goal here is total precision. They want to build up massive positions steadily over time. But, and this is absolutely crucial, without triggering those major price spikes or tipping off the broader market to what they're up to.
Section 2. Tracking institutional crypto moves.
To spot this, analysts are totally bypassing those standard price charts and zooming in on 4 key metrics: on-chain activity trends, daily inflows into spot ETFs, those massive institutional block trades, and the behavior of long-term holders. Honestly, these are the undeniable fingerprints of hidden buying pressure. And guys, the supply squeeze is very real. Just look at how long-term holders and institutional ETFs are gobbling up huge portions of the available Bitcoin supply. What's left over is just a rapidly shrinking slice of the pie for short-term retail investors. Tracking those spot ETF flows actually gives us a direct window into Wall Street's current appetite. When we see institutional inflows consistently crushing retail outflows, it tells us one thing for sure: traditional finance is quietly but extremely aggressively building its position.
Section 3. The Federal Reserve impact.
Now, as we all know, crypto definitely doesn't operate in a vacuum. It's heavily tethered to central bank decisions. Ultimately, the flow of global capital into risk assets like Bitcoin is fundamentally directed by Federal Reserve policy and inflation data. It's literally a cascading effect. Step 1, the Fed adjusts interest rates based on the broader economy. Step 2, the US dollar reacts to those rate changes. And finally, Step 3, Bitcoin's price adjusts accordingly. Basically, a stronger dollar throws up some severe headwinds, while a weaker dollar, that provides the ultimate tailwind for crypto.
And the magic number driving all of these decisions? 2.0%. That is the critical inflation target the Federal Reserve watches obsessively. If inflation runs hot, rates stay high. But if it cools down toward that 2.0% target, the entire equation for global capital flow shifts completely.
Section 4. Bullish versus bearish scenarios.
So let's objectively look at both sides. The bullish case here suggests that all this quiet accumulation is going to trigger a major supply shock. Demand outpaces that shrinking supply, forcing a massive breakout. But on the flip side, the bearish reality warns that severe macro headwinds and sustained high interest rates could just completely stifle that institutional buying power. Of course, it's absolutely vital to remember that markets remain fundamentally uncertain. There is no crystal ball here, and no future outcome or specific price point is ever guaranteed. We're strictly analyzing probabilities right now, definitely not certainties.
Section 5. Key indicators to watch. All right, so what should you be looking for? Here are the exact metrics you need to monitor over the coming weeks. First, track that on-chain data, because it reveals that hidden institutional buying. Second, keep a close eye on ETF inflows to track where Wall Street's capital is actually moving. And lastly, stay glued to those Fed rate decisions, since they shift the US dollar strength, which could really make or break a breakout.
So, what does this all mean? Is Bitcoin quietly gearing up for its next major move behind the scenes? Or do you think the market is just reading way too much into the data? We want to hear from you, so let us know your thoughts in the comments. This is the Ticker USA. If you want to stay ahead of the curve, make sure you hit that subscribe button right now for all the latest data-driven updates on gold, Bitcoin, and the global economy. Thanks so much for watching this explainer, and we'll catch you in the next update.